Welcome to the Monocle Banking Podcast, a series curated by Monocle Solutions where we balance the books in the dynamic world of finance. As always, a great pleasure to be your host, steering you through this ever-shifting story of banking and insurance in this series. Now today, FirstRand is under the microscope. It's a giant in financial services, employing nearly 50,000 people, recent earnings of almost 20 billion rand on a normalized basis, and a sector-leading ROE. The group is made up of world-class companies such as Rand Merchant Bank, its corporate investment banking arm, its retail division, First National Bank or FNB, and Westbank. And it helped spawn the likes of Outsurance and Discovery for good measure along the way. And I think the FirstRand story isn't so much rags to riches as it is self-made in Stellenbosch and in South Africa more broadly. It's a story about the rise of a business empire, and it's the extraordinary tale of a trio of entrepreneurs, the partnership of G.T. Ferreira, Laurie Dippenaar and Paul Harris, who founded a first successful startup, Rand Consolidated Investments, RCI, many years ago. They then merged this successfully with a fledgling merchant bank and grew Rand Merchant Bank into a market leader. And then next came a real leap of faith into unknown territory with the acquisition of a listed company, the life insurer Momentum Life, through a reverse takeover. And that business underwent a dramatic turnaround and cultural transformation. And the next very big transformational deal was a game changer. It entailed a risky merger with the country's oldest retail bank. That was First National Bank, FNB, dwarfing the size of their other businesses and operating in vastly different ways to the founders' hallmarks. The FNB merger was a massive challenge, but it was one that has paid off in an unprecedented way. And this, in a nutshell, is really how the group's history has unfolded so far. Well, my guest this week is taking the group into a new exciting era and building on that history as she takes over the reins from former CEO Alan Pullinger. Mary Vilakazi, welcome. The now I can say CEO, not incoming CEO of FirstRand Group, as you've been with your feet under the desk for the last 4 days. Welcome to the podcast.
Thank you very much for having me. I've certainly enjoyed the last 3 days. Might have something to do with the public holiday situation in South Africa, but firmly at my desk at the moment.
Fantastic. Yeah, I was just chatting to you about all of these public holidays and how difficult it is to get business done in South Africa. But I want to start on that introduction. You know, you're the group's first black female CEO, and I just want to get your thoughts on how you carry that mantle, because ultimately you've been selected based on your banking, your financial and your leadership skills, and that you are a woman and black is secondary to that. But we obviously cannot be blind to South Africa's context. So how do you feel when people zoom in on those facts that you're blazing a trail in many respects?
So, Michael, I appreciate where people are coming from. I guess when you look at the sector in business or in financial services and you look at the number of women in leadership positions, you can't still help but have a counting process. And I understand that's what people are doing. And I've recently been with women organizations that support women leadership. And, you know, when they celebrate that they see one of their own, and it gives them hope and courage. You know, you can't take away the importance of, I suppose, of seeing appointments like myself. And, you know, we've also got a history in the country from a race point of view. So, you know, people look and say, okay, are we making progress? So I appreciate those narratives, but they're certainly not mine. So, I mean, I think you said, how do I carry that mantle? I realized many years ago in my career that, you know, when I internalized those messages, then I started feeling, okay, I'm not the only one. It carried a lot more pressure. And I just used to look and think, but is that what one of my male colleagues have to even carry? You know, nobody actually ever asked, how do you feel about this role?
Yeah. Doing
it as men. So I realized a long time ago that, you know, I am here because I make a contribution. I play a role that I've got to do, and it really has got nothing to do with my gender and my race. So I have a good appreciation of where people are coming from, and I'm very respectful, and I understand the impact and what the story means. But my one, certainly when I come into the office, I work on the basis that I'm here for what I've got to offer the organization. And I think that is the case with a lot of women leaders. And yeah, I try not make that my own story.
You know, it's such an interesting perspective because often during events like Women's Month, we have these conversations as broadcasters with female leaders, and you look at the CV, you look at the achievements, And you just want to talk to those achievements. You don't want to talk to the person's gender or their race or any of those issues, but they keep on cropping up in South Africa. And I guess it's a way we have to navigate these various layers of identity in the workplace. But ultimately, I suppose we all have a dream that we get to a point where this isn't the outlier, it isn't extraordinary, and we can just zoom straight into the meat of the conversation. Now, you've had a remarkable journey. You grew up in Alexandra Township, and I just think from those upbringings to become a CEO of arguably the country's premier financial services group in FirstRand is just an extraordinary journey. Can you just walk us through some of the pivotal moments of your life and your career that helped shape your trajectory to where you are today?
Yeah, I have the luxury of sitting at my desk, and when I look out, if my eyes were not fading, I probably would be able to see some of the streets I grew up in Alex. So that I find a very good, humbling way of occupying the office. But I'd say there were probably a few pivotal moments, if I can step through them. And often I always remind people and remind myself that, I am here because opportunities were created by someone along the way. But I mean, when I was growing up in Alex, I'd say one of the first things that made a big impression and helped perhaps appreciate that I had certain talent at that point in time was a program somebody started, and it used to be called the Gifted Child Program. And we would, on every Saturday, we used to go to Red Hill School. We're based in Alex. I know there was a center in Soweto as well. And we used to go there, get some extra lessons. But I suppose what they also did, because when somebody tells you that you are smart, or you are gifted and you are chosen as one of the 2 people in your grade, okay, you also start perhaps acting that way. And then they would take us on camps. And I just remember it being one of the first places where I would say, I felt like I was part of some elite club. And then later on, I'd say that it was, I had an opportunity of going to a school, again, that was started by an Irish lady, Lucy Purcell, who came and who was living in South Africa at that point in time and wanted to make a difference and offer her talent in one way or the other. And reflecting on the education system in South Africa, she started a private school with like-minded teachers. I mean, when I say private school, I'm not talking about the likes of St. Mary's where my kids go, but this was a school that was privately owned. She got 1 floor of a building in Braamfontein in De Korte Street. And that's really where my high school was.
Wow.
And I had the most remarkable teachers, who were actually just there because they felt they wanted to make a difference. I think, they also obviously were very selective in the pupils that they took in. And so I feel like St. Anders played a very big role in my education trajectory. Before that, I had been in Alex up until grade 9. Then at 6 as we would have headed. And then finishing off at St. Anders, obviously that allowed me to go to VET or be accepted at VET. And PwC then came to the party with a bursary. Don't know how I would have able to go through varsity. So I had the privilege of getting a bursary and then doing my articles at PwC. So I suppose if earlier parts of my career, I said those 3, whoever said yes along the way to me being in those places, I think made a big difference.
And you were one of the youngest partners in the world at PwC.
Yes. When I got to PwC, I'd say the thing that I did a lot was, I did a lot of VEC work, more because I was probably just looking, for money and a holiday job. But I didn't actually realize that those were the early days of me getting work experience at the time. So by the time I started articles, I had actually already been going for a lot of VEC work, which allowed me to assume a lot of responsibilities, that generally, I guess you wouldn't associate with like a first-year auditing clerk, second-year auditing clerk. So that also played a very big role around how my portfolio got to be shaped and the opportunities that then were availed to me. So I clocked in quite a lot of hours actually before finishing off my articles. I think I actually did my hours. My hours were done 2 years and 2 months into my 3-year contract because of the exposure I had. So I think PwC was very good for me as a place to learn and then also a place to lead, because I think in my 3rd year, I already had a lot of managerial responsibilities at the time. And then I specialized in insurance and I had wanted to move to Cape Town, and there happened to be an opening for a manager in Cape Town, worked closely with the audit partner at the time. And then because there was no one between him and I had the propensity to learn, and I was never shy of putting in the hours, I was able to rise through the ranks really rather quickly. I suppose hence, getting to a place whereby I could be appointed a partner at that point in time, at the age of 27. I suppose that was quite significant because I looked after one of the big audit clients of the firm. So those were moments, I think, that were really quite key because I was given lots of opportunities at a young age to learn and to stretch myself. And I think all of those put together played a key role in my exposure, I would say.
Mary, it's so interesting listening to you talk about your educational background. And I'm reminded of a conversation I had with John Oliphant when he had left the Government Employees Pension Fund to start Third Way Capital, his private equity fund, and speaking about how his passion for education was really the underpin for everything. And, he was one of the top achievers in maths in a class and in a school in the Free State that was averaging 33%, I think, for maths. And here he was getting distinctions because his gran would give him R2 every week to go and buy the Sowetan and then watch Will Smith on TV. And he would then go and teach a lot of his classmates and was obviously a high achiever. So it just speaks to the importance of getting the foundations right, getting education in particular in South Africa right for us to open up pathways for more South Africans. And we'll come back to that. But I want to come to where you are now in your career. You youngest partner in the world at PwC. You've been exposed to all of these things. You then migrate to become CFO of MMI Holdings. How did that shape you? What were your priorities and challenges? And how did you navigate through that period as CFO?
So I became CFO at MMI in 2015, a year after I had joined on a full-time or executive capacity as the CEO of Balance Sheet Management. So by then I had been in the organization as an employee because previous to that I'd been a non-executive director on the board after that Momentum and Metropolitan mergers. So it was not a business that I was unfamiliar with, but I guess what happens when you now change seats is you are part and parcel of the executive team and some of the things from the outside. Imagine function in a different way. I was based in Centurion, and I think there that's like really it was mainly the Momentum business that was there. But Michael, it was a great learning experience for me because I think from about 2015, that's when MMI faced a lot of headwinds. I always recall that for a few reporting seasons, it was the reporting results that were under pressure at the time.
Yeah.
Then I always say to the management team that, when you're doing well, yes, you can complain about pressure, but try not doing well. That pressure multiplies a fewfold. And I suppose also you have to then deal with the leadership team that is under pressure. And as a leader, you need to also make sure that you're quite well equipped because you can have a few conversations to say to people, you're not doing well. Or you can reframe it and just say, how do we do better? So during that period when I was the CFO, and the fact that the businesses, there was a merger which had started in some places, had achieved what was intended, in certain places hadn't actually been bedded down. There was a lot for me to learn. And I also really got to learn about the people, appreciate the people a lot. And by the time that I left MMI, the FirstRand people kept on saying, are you excited to come to FirstRand? I kept on saying, I'm very sad to be leaving MMI. It had become home.
Yeah.
So, I worked very well with the people there. And I think on some of the challenges that we faced, I was really quite pleased with the progress that I think had been made and I think what had been achieved. So I think just because it was I wasn't there during summer.
Yeah.
I was there during an autumn and a winter. I think there were lots of lessons to be learned and that I find I still to this day consider them very valuable.
Well, it reminds me of what the CEO of NVIDIA said to a group of MIT students recently around suffering and challenge shaping who you are as a leader, because he was obviously speaking to a room full of largely very privileged students with very high ambitions, but perhaps a room that hadn't potentially struggled very much, and how that shapes you, how going through those autumns and winters do end up invariably teaching you more than some of the good times. I recall Nicolaas Kruger during those years as well, being a very people-centered CEO. So not surprising to hear you say you missed the culture and your colleagues when you then went to the FirstRand Group. And you've risen through the FirstRand Group all the way up to COO, where you spent, was a little over 5 years before this appointment. Just take me through that passage and pathway, because it's always had a DNA of being highly entrepreneurial. And as COO, you must have really rolled up your sleeves and got your hands dirty inside the nuts and bolts of the strategy of the business.
So I was in that role, so I basically got appointed as an executive director, as the COO in 2018, just when Alan Pullinger started his role as CEO. I wasn't the chief operations officer. So I had a portfolio at the FirstRand level. I was responsible for our broader Africa strategy. So those are at the time 9 subsidiaries outside of South Africa. I was responsible for making sure that we are making traction and I think growing in opportunities that we have in insurance and invest, because that's, that was really an industry where I came from. And the broader Africa portfolio, the thinking at the time was that, you get to look after subsidiaries, deal with the boards, deal with the regulators, and see different banks at different life stages operating in different markets. So that was really there to just, I think to get me up to speed, and I think just get me immersed in banking. And then obviously as an executive director, I sat on the RMB, FNB, West Bank boards and their excos, and we go quite deep in FirstRand. I mean, I think the owner-manager culture is still quite strong, so we believe in making sure that we are hearing from the people that are actually making key decisions. Yeah, so I think the people in FirstRand really opened their doors, and for me to come into the organization and really further down, as I say. So I think I'm always sometimes amazed at how many people I have come to know when they mention lots of leaders or people that are senior in the organization. I have already had opportunities of interacting with them. So I think what Alan created as a portfolio for me entering the group to leverage off the skills that I had, and also to provide me with a platform of working with the leaders here and learning about the industry. I think it is a really well curated portfolio if I look back at the last 5.5 years.
Were there particular mentors inside the organization that you sparred with, that you learned from during that period as you were getting exposed to the broader portfolio within the group?
Actually, a lot of them are really now on the Stratco team. I would say, when I arrived here, I mean, James Formby was the CEO of RMB. Jacques Cellier was the CEO of FNB. I think that they did very well, and I think giving me lots of time, involving me in lots of their own business strategies. And I think that was that provided an environment in which I could learn. And I mean, these are people who had been with the group for at least 20 years. Always had lots of time to allow me to immerse myself in their businesses. Yeah, and I think if I look at the FirstRand level, obviously Alan was my boss, was my key sponsor. I spent quite a lot of time coming to his office on various topics, and whether philosophical topics or business topics. There was a lot of sharing. There's a culture of sharing and learning within FirstRand that I think helps a lot for a person who comes. There are lots of stories going back to the founders. There's a business philosophy that's captured, which I think, which was really created by the founders, and over the years, things have been evolved as business changes and as the business continues. So people are very generous in sharing those stories. This is why we do this, is because we had tried that. Yeah, so I think my 5.5 years have really been about lots of listening and learning. And then obviously when one has an opportunity of engaging with the founders, hearing the stories also from their own mouths, and they themselves are also very generous in sharing their own challenges, lessons that they learned, and also why they arrived at certain decisions and approaches. So I've been, and I'm obviously Johan Berger, who's now my new chairman. Actually, I think Johan I've been working closely with him from when I was at MMI. He used to be the chair of balance sheet management when I was the CEO of balance sheet management. So, there's always been a good working relationship there, one of mentoring, one of asking questions, and Johan, very good at explaining very technical concepts, always had the time, I think during the last couple of years. So I feel very fortunate, actually, Michael, that I've had access to people that were always willing to share, willing to listen, and then always willing to challenge.
Well, and one needs that culture inside an organization. And often when you have kind of founder-managed businesses that then transition into a more mature, professionally managed era, sometimes one worries that culture can die out. But it certainly doesn't sound that way, or even look that way from the outside into the group. And just listening to you speak, it seems like it's been very purposefully kept that way as well. You mentioned the balance sheet, and you've got experience obviously there. And I often think, and just maybe zooming out at a more macro level, when we have the conversation around banking in South Africa and financial inclusion, that sadly too many politicians don't fully understand a bank's balance sheet, and the fact that banks are there really to first and foremost look after depositors' funds. There's a reason they say the first rule of banking is always say no, because if you make a loss, you're the most highly leveraged entity on earth. You've got to do a deal probably 33 times bigger in the current interest rate environment to recoup that loss. Yet we often have politicians saying, no, we need to open the taps more. We need to find new and innovative and creative ways to fund more SMEs, for example. And there's a balance to be struck here. But clearly, part of your strategic intent, as it's codified, is to offer this platform-based financial services that really builds a future of shared prosperity. So it's there, it's in your strategic intent. How do you and your leadership intend to ensure that you strike that balance of kind of prudent financial management, looking after the balance sheet, but looking for ways in which we can help South Africa grow and help fund more businesses in South Africa?
Yeah, I think profound observation there, seeing how our purpose really around contributing to a future of shared prosperity for South Africa fits in between the expectations that people have of banks and our responsibilities as banks, and yet I think solving for the societal challenges that you outlined. But I think first and foremost, Michael, if we ever as a bank took our eye on the importance of making sure that we look after depositors' money, and we've got robust frameworks to ensure that. I think that's sometimes really very lost, because that is our primary function, as you say, and ensuring as well that the public has got trust that is what we are doing. And when we lend prudently. We understand the impact that we have on the financial stability of the country. And I think when we think about our own vision of creating shared prosperity, we understand very well that the only way we can continue delivering good returns, I think you spoke about FirstRand's leading ROE. I think FirstRand has delivered very well to its shareholders over many years, something that we know it's very important for us to continue doing. But we know that we can't do that if, I guess, the societies that we operate in or our customers aren't growing and aren't experiencing that shared prosperity. So, I think on topics when it comes to lending, and I think understanding the pressure that small businesses that don't have a long track record of cash flows, businesses that are just starting, it is hard for banks to lend to them, because we do lend to future cash flows. We look at track record and so forth. But we don't actually, so in F&B and F&B commercial and their business banking, we've got such passionate people that focus on how they can help unlock access to resources. And some of them maybe don't sit on the bank's balance sheet, but some of them maybe sit with DFIs. They sit with our foundations, with the foundations. And we are quite privileged that we've got the FirstRand foundations with kind of a lot of key resources. But there's a lot that actually we do, Michael. And I think one of the things we don't get right all the time is actually talking about the things that we do, to not just say, sorry, you don't have the cash flow, sorry, you don't have the track record. There's a lot actually that gets done to enable those SMEs. And I think when we think about these frameworks that we've now been putting in place with shared prosperity, is we are working and developing on models that hopefully we can start scaling. Because I suppose if you've got a few SMEs that are working well and that we've supported to become part of the mainstream, where it's easier for banks obviously to support them, it's, people will always look at and point to the ones that we're not helping. But I think also with National Treasury, some of the schemes that have been put into place, and with us giving this a dedicated focus, I think that's how we realize our shared prosperity vision, because we do need these SMEs to thrive. They are the biggest employers in the country. And we know that actually some of those small businesses are really the ones that are going to be at the heart of the structural reforms that take place, in the country. Just as the government steps out from being, from playing a dominant role in some of the industries, you do need some of these small businesses to start coming in. So it's a business imperative for us to see those businesses come through. So yes, we do a lot. And as I said, maybe we don't talk enough about it. And I think it will be the same as well when it comes to financial inclusion. There's a lot that we do. And I guess what always encourages me when I spend time in the business with the F&B team is that these are not topics where when the business guys, where our business teams, when they're tackling because there's criticism or pressure somewhere else. You've got these very passionate young people who think, but surely we can do more.
Yeah.
Surely we can do. And, I'm always encouraged that for as long as we continue to attract that kind of talent, smart people, but also who understand the need for us to push harder, try harder to solve for more inclusion, because ultimately it is good for us as a bank in the long run. But it's very important, as a big player in the economy.
Yeah, but I agree with you on the communication part, because speaking to the likes of Gordon Liddell, for example, or even in many of your competitors, there is so much being done that sadly I don't think is being communicated enough. And that allows, maybe in a vacuum, certain legislators or MPs or anyone with an axe to grind to come out and try and beat the banks, when in fact we should be very grateful of the quality of our financial services sector broadly, banks and insurance companies. We have a very advanced, very well regulated, very well managed banking sector that can compete globally with anyone in the world. And I guess sometimes one gets the sense that maybe the banks are very careful of how they communicate. Again, one just has to look at the recent Competition Commission case into the Forex chatroom saga. And there were comments made from MPs that clearly belied their agenda against the banks. And it was hugely concerning on the one hand, but hugely infuriating on the other, when we have much more serious problems to tackle. I don't want to go down that rabbit hole, though. I want to remain at a more macro level. And you mentioned the reforms and government stepping back and allowing the private sector in. We've seen how effective that's been just with the removal of the cap on own gen. And we've now, in terms of solar, added more than a Kusile or Medupi in a little over 12 months. So it's evident that when we allow the private sector into the South African economy, we can turn things around. Are you confident that the administration is doing enough, and that come the end of May, we're going to have sufficient continuity for this reform agenda to continue?
So, I think that the reforms that have been taking place and the progress, I suppose, on some of these reforms, we can always have a discussion about whether that's fast enough. We would always argue that that's not fast enough. But I think that direction of travel has been very encouraging, Michael. I think if you just look back to the 10 years that we've had, or the last 15 years really, where some of these reforms were necessary and they didn't take place. So we do think that is, I think, a positive outcome of government and its intervention. We ended up with no electricity to start having a lot of the traction on the reforms, and we ended up with a lot of the Transnet challenges. So it would be good if we actually, I think, start tackling some of those other, water is also now a crisis, but it would be good, I think, as a template for the next government to start tackling some of the reforms and the work that has to be done in advance of a crisis. I think that would be refreshing. But I guess your question is what expectations of the continuation of these reforms? I certainly hope, given where the country is, given the fact that, in the next 2 years, we still are talking about GDP growth of below 2%. I sincerely hope that the new administration continues. And if there's any change they can make onto the reforms that are currently underway, is to move faster. But it depends on how it goes in May. I think, particularly coalitions. So, you can see there's a bit of an overhang at the moment in the financial markets as people await to go to the elections. But I think all I can really express is hope, Michael. I don't have a silver
or a crystal ball. Yeah, I know. If we did, we wouldn't be chatting here. We would be speculating on crypto futures or something like that. But I do think that, given so far what the polls are indicating, is that the consensus view does seem to be on an ANC falling below 50, but not so far that it can't cobble together a coalition of smaller parties, and so it doesn't have to acquiesce to the more populist rhetoric from some of the other larger opposition parties. And so hopefully we will then see that continuity and that doubling down. I was listening to Rudy Dix on a panel with James Hoddy, the CEO of Traction, talking about reforms in rail at the recent investment forum in Sandton. And Rudy Dix said, watch this space. We as Operation Vulundlela, and we've got the president's backing, are going to be redoubling our efforts in the new administration if they get another opportunity. Obviously, he would say that because it's just before an election. But I think Rudy is sincere when he says that. And OV has been a real standout success and something that, be churlish not to recognize. Mary, sorry, just as we are running out of time, and I know I've taken a lot of your time already, just lastly, how do you balance the demands of leadership with your personal life? Are there any kind of things you do in your downtime to just maintain a sense of perspective or well-being? Or is it just, that work ethic that you took into PwC that's followed you through your entire career? What do you do to enjoy your downtime?
Yeah, no, you do have to create those pockets where your mind can actually rest, so you can have better clarity of thought. So what I do actually is I meditate. So you're asking me now when I've just come from a meditation retreat over the weekend. That's my mental downtime activity. And I go into a silence retreat for a whole weekend. And I'm grateful to my husband, who then stands in to look after our children over those periods. But I think it's important to make sure that one is able to sustain the energy. Our bodies are actually fragile, irrespective of what we might want to believe. And I guess I've been in leadership in high pressure environments for a long time, that I've got a formula I know of what's required, exercise, see my trainer, spent a lot of time with my family, traveling. And I suppose, Michael, I always say, for me, my checkpoint will always be when I don't actually get energized around the things that I need to do. Mm-hmm. Because then I know something is out of balance somewhere in what I have to do. But I try and do as much as I can, and try and make sure that I think I'm healthy, I'm learning, I'm excited about what I can change.
Well, it sounds very much like the Jurgen Klopp philosophy. As a long-suffering Liverpool supporter, hearing that he was standing down this year, but he said he had run out of energy. I thought, well, there's someone who absolutely knows their internal processes, their mind and their energy levels are so key, in high profile, high pressure positions. It's so important to be in tune with that and to know then when to step away if you start running out of that energy. But you clearly have still lots and lots of energy and lots to give. Mary Vilakazi, thank you very much, CEO of the FirstRand Group, for sharing a little bit more about your personal journey with us here on the Monocle Banking Podcast. Take care.
Thank you so much, Michael, for having me.
Well, that wraps up this week's episode of the Monocle Banking Podcast. Before we go, I'd like to thank you again for tuning in. And until next time, don't forget to like and subscribe to the Monocle Banking Podcast.